Welcome to Gradient's weekly business roundup. Today's episode will cover the following topics. The key highlight of the budget 2022 presented was an optimistic goal of bringing down the budget deficit to 8.8% of GDP in 2022 from 11.1% forecasted for 2021. This translates to a deficit of Rs 1.6 trillion from Rs 1.8 trillion expected for 2021. Key revenue-related tax proposals included Social Security contribution, surcharge tax, special goods and services tax, proposals related to license fees, auctions and other non-tax revenue, and VAT on financial institutions. Among expenditure, recurrent expenditure is to grow to Rs 3 trillion, up 6.4%, and is 77% of total expenditure, to mainly fund salaries and wages and interest payments. Public investments is slated to grow to Rs 931 billion, up 60%. As a percentage of GDP, this is to reach 5% in 2022 compared to 3.5% expected in 2021. The budget deficit will be met by domestic financing, of which 86% is slated to be from non-bank borrowings. Exports exceeded the $1 billion mark for the fourth consecutive month in September 2021, with imports amounting to $1.5 billion, flat year-on-year. Accordingly, the trade deficit narrowed to $495 million from $525 million a year earlier. Exports were driven by garments, petroleum products and rubber products. Notably, agriculture exports decreased by 0.6% year-on-year due to decreased earnings from tea and manufactured tobacco, spices and vegetables. The manufacturing PMI reached a 7-month high in October 2021, reaching 60.4 index points, led by increased new orders and production pertaining to food and beverage and textile sectors. However, rising cost of imported raw material was highlighted as a concern by several respondents. The Services PMI increased to 57.9 index points, driven by improved levels of business activity related to financial services, transportation, education, and trade. However, the employment sub-index remained in negative territory as retirements and voluntary resignations exceeded the number of new recruitments. The central bank rejected claims of forced conversion of worker remittances into rupees under the proposed securitized financing arrangement. Previously, the central bank was reportedly seeking an investment bank to raise medium-term foreign borrowings by securitizing remittances. And in other news, vehicle imports are unlikely to resume until the prevailing foreign exchange pressures ease, says Treasury Secretary SR Atigala. Vehicle imports have been restricted since March 2021 as Sri Lanka grapples with significant shortfall of foreign currency inflows. The first 2 weeks of November 2021 indicated promising growth in tourist arrivals, with over 19,000 arrivals on record. Key source markets included India, UK, Germany and Pakistan. Since lifting border restrictions in January 2021, 8,310 tourists have arrived in the country. Moreover, Air France and Swiss Air announced they were resuming scheduled flights to Sri Lanka. The personal data protection legislation, which aims to protect private data of individuals held by external entities, including government organizations, banks, telecom operators, and hospitals, among others, received cabinet approval. The all-share price index at the Colombo Stock Exchange ended the week to 17th of November 2021 at 11,024.89 index points, up 4.8% from a week earlier. Foreign selling persisted, with net foreign outflow reaching 47.8 billion rupees year-to-date. And in other market news, the Colombo Stock Exchange approved a revision of the ASPI calculation methodology. It proposes to change its calculation basis from full market capitalization weighting to free float adjusted market capitalization weighting with effect from January 2022. And that's a wrap for today. Hope you have a great day, stay safe and stay healthy.